This week, Crypto Market Monitor, we focus on U.S. executive order on cryptocurrencies. What does it mean for the future of cryptocurrencies? In a nutshell, this is what we know. The U.S. president has signed the long-awaited executive order on cryptocurrencies, directing federal agencies to evaluate their approach with 6 key objectives that ensure responsible development of the digital asset sector. The Federal Reserve and the Treasury Department are working on reports to critically evaluate current financial systems and shortcomings in consumer needs. They are also working on one key type of digital asset, stablecoins, and are exploring the possibility of issuing central bank digital currency, CBDC. And this is our analysis. On Wednesday, the U.S. government acknowledged the growth of the digital assets industry and directed federal agencies towards a coordinated approach for responsible innovation. The executive order focuses on the following key sectors: consumer protection, data privacy, financial stability, protection against illicit use, leadership in global finance, and responsible innovation. It has been in work since October 2021 and recognizes that several international monetary authorities are also exploring and introducing central bank digital currencies, or CBDC. Overall, it does not direct any regulations for crypto companies and exclusively focuses on the growing digital asset ecosystem. According to a senior administration official, 40 million Americans, or 16% of the total U.S. population, have invested in or trading cryptocurrencies. The executive order referred to 6 principal policy objectives for digital assets as mentioned. 1. Investor protection. Companies providing digital asset services may have inadequate protection for sensitive financial data, lack vital custodial services, or lack proper disclosures of risks associated with the investment. They recognized the cybersecurity risks and hacks that happened at major cryptocurrency exchanges, leading to losses of billions of dollars, and talked about protection to consumers, investors, and businesses against such events. At the same time, maintain privacy and shield unlawful surveillance. 2. Global financial stability. The executive order talks about protecting global financial stability and mitigating systemic risks by critically evaluating and regulating digital asset service providers. Some of these companies have rapidly grown and thus carry the risk of being non-compliant with certain standards of traditional markets and legacy financial firms. It calls out the regulatory framework's evolution to include unique use cases and functions enabled by digital assets. 3. Protection against illicit use. As digital assets are based on open infrastructure, it poses the risk of misuses such as money laundering, cybercrime, ransomware, narcotics, and human trafficking. While these can be controlled by implementing anti-money laundering and countering the financing of terrorism standards, not all jurisdictions follow these standards and thus also presents the opportunity to evade global financial sanctions. The order calls for appropriate controls and accountability for current and future digital asset systems to promote high transparency, privacy, and security standards through regulatory, governance, and technological measures. 4. Leadership in global financial system. The U.S. government is interested in maintaining the leadership in global finance that ensures responsible development of payment innovation and digital assets. This technology enables capital flow in the international financial system, thus setting up fair standards that promote democratic values, the rule of law, privacy, the protection of consumers, investors, and interoperability with legacy finance infrastructure is most important. The United States derives significant economic and national security benefits from the U.S. dollar being a reserve currency for the world. They certainly want to sustain this financial power and promote their economic interests. 5. Affordable financial services. Access to safe and affordable financial services is still a luxury for many people. Responsible innovation in financial services will enable faster, cheaper, safer payments, both domestic and cross-border, and will provide cost-effective access to financial products. 6. Responsible innovation. The potential implications of digital assets innovation are huge and can spread from privacy, national security, robust financial services, to climate change. The order calls for the development of the digital assets ecosystem in a responsible manner that includes privacy and security in the architecture, integrates features and controls that defend against illicit exploitation, and reduces negative climate impacts. To sum up, the Federal Reserve is critically evaluating the possibility of issuing CBDC through ongoing efforts to assess policy and technological questions. The U.S. Treasury Department has been asked to look at one type of digital asset, called stablecoins, and draft a report on the future of the money and payment system. The report will analyze cryptocurrencies' impact on economic and financial growth and financial inclusion. It will also evaluate how the current system does or does not meet consumer needs. One of the most concerning points discussed in the executive order is the risk of national security through crimes committed using cryptocurrencies. The fact that digital assets are built with no identity mechanism allows people to misuse them by using infrastructure in some jurisdictions that do not implement AML standards and thus creates a huge risk of global financial fraud. The order ensures continued work towards building an international digital assets community that's inclusive, consistent, has democratic values, and protects the integrity of the global financial system. And that was this week's Crypto Market Monitor. We wish you a great weekend ahead. For more information about SEBA Bank, visit seba.swiss. This document has been prepared by SEBA Bank AG, SEBA, in relation to its activities in Switzerland. SEBA is a Swiss bank and securities dealer with its head office and legal domicile in Switzerland. It is authorized and regulated by the Swiss Financial Market Supervisory Authority, FINMA. This document is for your information only and is not intended as an offer or a solicitation of an offer to buy or sell any investment or other specific product. The information contained herein does not constitute a personal recommendation or take into account particular investment objectives, investment strategies, financial situation, and needs of any specific recipient. Certain products and services of SEBA are not accessible to residents and/or nationals of certain countries. Certain services and products are subject to legal restrictions and cannot be offered on an unrestricted basis and/or may not be eligible for sale to certain investors. Recipients are therefore asked to consult the sales restrictions relating to products or services in question for further information. Furthermore, recipients may consult their legal or tax advisors should they require any clarifications.